audit review with Nancy.
Okay. Well, they finally sent us our draft audit. It's actually toward the end of March, but it came in the midst of the cluster. So I've been working through it very carefully, page by page, because we did discover in the last 2 years that there were odds and ends of things and that needed to be changed. And so I said, well, they took forever to get to me. I'm not gonna, give up my weekend just to look at the audit. So, but, I'm ready to contact them and at least make the changes that need to be made, in terms of accuracy in a few places. We've lost some continuity. So what I have here are some primary pages from the audit that I find it easiest to tell council what is our situation. So wastewater and ambulance have always been classified as enterprise funds, and they call them that because they're quasi-municipal businesses. And they've been, so they're audited kind of separately. So this is from the end of 2020, and let me just say, things never look the same as they do here, particularly for wastewater. So wastewater, as you look at the first line, it says operating revenues. That is correct. There's also some additional revenue lower down called income. That's how much he took in. When you look at operating expenses, you'll see that it's the salaries, benefits, program expenses, other, and then depreciation. Well, you know that depreciation is not an actual expense, right? That's a loss of value. So when you're looking at these accounts, they look at them different than government. So if you add up the first three numbers, you only come up with operating expenses of $267,000 or something. And I'm like, how can that be? What's going on here? Well, it's because it's being operated as a business that other places in the system, they deal with debt. And further down, they talk about the interest expense, and that's, so these two accounts, wastewater is very different than ambulance because it has a lot of debt and some other kinds of things going on. What I can tell you is, because they operate on their own funds all the time, never taxpayers, that is true of wastewater. It's not true of ambulance anymore. That what the bottom line is their net change in position from the year before, which does include building values. So you guys, I have copies of last year's audits if you want to take it home and read the whole thing. But I just wanted to show you that where ambulance is more so than wastewater, but when I pulled out the expense reports and the revenue, Rick may actually have brought in a little less revenue than he expended, but that doesn't matter because his funds are his funds. So it just means he, last year maybe took in extra. So it's not like you have to go in and do a new appropriation or anything like that because his funds were never taxpayers anyway. So, but ambulance, I want to point out, that is the revenue that they came up with for ambulance. But if you look at the operating expenses, these now are more accurate because there isn't a lot of debt in the ambulance, so it's not pulled out. So I added up, now depreciation's in there too, so remember that's not an actual dollar value. So when I took out depreciation, I come up with $560,338. When I look at my expense report, it says $588,504. So I'm not sure what they are not including in here. But the point is, what was our, we last year that ended on June 30th, we did not, in that budget, have any taxpayers' dollars set aside to cover a loss. And you'll now know that we were going to have a loss. How are we going to cover it? So it looks to me that the loss, and I think I can ask the auditors exactly, the drop in revenue between revenue and expenses might be about $180,000 that we have already paid, mind you, because it goes out of our general fund. That means the taxpayers have paid for it in that year. What do we have that's going to make sure that we cover that? This is what we'd like to see stop, but because we now discover some of it might be in the billing process, that is part of it. So, that being said, before you do a lot of tiers, and you look at the bottom, and look at the position, they no longer have, their vehicles are not, I don't consider an asset, and so I don't think they're in this net position. And Rick's assets may not be in there, the sewer plant itself, the value of the plant. So when they said on July 1st, that there's 144,000, I don't really think we actually even have any CIP analysts, but I will ferret that out from that. But I think that's our loss, 180, 190,000 in real numbers between how much we paid for the service and how much revenue came in from ambulance. And I think that also includes revenues that we got from HRSA, which is different than ARPA, but was the extra money. We only had one check.
Yeah, 'cause
This
we
year
only
we've
got- we only got the
like
big
18,000.
the big checks in this new year.
Yeah, so we already have some additional funds this year. So that being said, go to page 2, the next one, it's not page 2, it's schedule 1. And at the top, there's like a middle line. We're gonna look at actual, now we're looking at government, and we're looking at revenue. So, we have to, they have the budgetary fund balance, and that's because they're talking about how much we had in our accounts, so that's more of the checking account or something like that. Property taxes, all the revenues in the first line are what we estimated we were going to receive. Some of them were guesses, some of them were given to us by the state. What the actual amount is, so the final and the original are probably exactly the same, so jump to the actual amount. And then go to the variance, so for the good news followed by the good news. First of all, property taxes have never been absolutely 100% collected, but we had a snafu that we won't go into details that happened in September of that year, and things got lost from the system, Trio crashed, something happened. We lost a whole bunch of stuff, and Heather and Tony re-entered it, and we still haven't figured out what happened, but it looked like people paid twice, so I think the auditors just shook their head and said, okay, you collected all your taxes. I know that's not true, but I think it's close. But in excise taxes, 48,000 more than we expected. People bought new cars or less than small. State revenue sharing, 65,000 more than the state told us prior to making our commitment. Homestead exemption, they raised the reimbursement, 33,000 real cash dollars more than we expected. And then as you go down, the ones that are the negative, which I don't know what other was anyways, it's when we things like some of our contracts that change. General government services, public safety. So the major thing is at the bottom, when it says amounts available for appropriation, we literally collected in cash, real money, $138,121 more dollars than we thought we would and that we needed because we budgeted our revenue to match our expenses. Now, of that 138,000, 65,449 state revenue sharing goes to Luke to put into next year's budget automatic by state law to offset property taxes. He already has more revenue than he thought he was gonna have. We did that the year before because the same thing happened. I believe with homestead and excise for sure, it's just pure cash. Homestead, I don't think there was any rule, because it just basically what it does for us is it says rather than us getting 70% of the value of the house, we got more than that because we're already losing when people do the homestead exemption. So that's the good news. That means that to surplus, literally to surplus, because we're gonna roll that 65 forward, that's about another 65, what's that, 138, who can do quick math there? 7,000?
203.
So that's gonna go straight in surplus, because it's actual cash. So let's go for the second good news. Let's go to our actual expenses, which they're calling outflows, general government. And the one thing that's hard for me to deal with sometimes with the audit, and I've come to accept it, is they break apart our departments into categories that our departments are not in, so it doesn't always match our wonderful expense report. Public safety calls many departments. So, appropriated, what we budgeted, as expenses, except for there's something at the very bottom, the transfer to other funds might not be something in our budget. And then the actual is what it came to be our final expense. Then the variance is that we underspent our appropriation by $221,937, $222,000. What does an underspent appropriation mean? Well, if we collected all of our revenue, or the 100% of our appropriation, We also have funds that we collected up here that we didn't spend. So how are we gonna cover the ambulance loss? This unspent appropriation. Because an unspent appropriation is also equal to dollars, because we collected our full expected appropriation. So that is cash that we collected but didn't spend, but it wasn't because we were trying to, well, it's for many reasons. Part of it is the police department under public safety. Some of it's under general government. We were tightening our belt. We knew what COVID was gonna do to us. You know, we were in 2020 there. And we were closed at times and we had people laid off. Public Works, we lost a couple of employees and couldn't get jobs filled. Library, same thing, we had somebody laid off. So those were, you know, we had the budget for the budget. So we just saw the ambulance. We already paid the bills. What we're gonna do is on one of our warrant articles, we're gonna use this unspent appropriation. We may have to designate the quantities for to cover the losses in ambulance, okay? Then whatever that number actually is, that also is money that, guess what? It's real money we collected, goes into surplus. So we're going, at this point goes into surplus. So when I can get some actual numbers, I don't have them tonight, but just, you guys can look at them yourself. I want to, really say what was the absolute ambulance loss. If that's a big number to put into surplus in 1 year, 70,000 and then possibly another 50,000. It is possible that you could designate some of it to be transferred into CIP or to go to excluding or whatever. You just don't want to do that in the warrant. So I thought that would be best to show you, and then what's behind are where it breaks down a little bit more into the expenses for each individual department to some extent, and there's a few things that I'm going to change that I want them to change. But it basically breaks out a little bit more detailed where that underspent appropriation.
You still have to pay for the pocket park too.
Yes,
Yeah.
yes,
So
yes, we have,
we could use that.
right,
Yeah,
and
you
we
still have to-
actually, we're gonna have to look at, we've got more money to pay the Pelletier to finish whatever we're gonna have them finish on the lot based on the bid, because there is some contingency left back. And we did have more disposal than we thought we were gonna have, so we paid it, we probably haven't designated, so that could also be done. So we're sitting in good situation, we haven't, and that, that's the prime stuff I pull out of it, and then making sure they don't have any mistakes. And some of the mistakes just have to do with loss of knowledge, and so they're saying we overspent animal welfare because, well, they forgot that we have animal welfare. They're saying we overspent something else, but it's the person looking at it. So, bad news, that yes, we had a loss. Good news is that for that 1 year, if something was gonna happen there, that what we didn't spend on our police department, really what we're spending on our ambulance people. And if we can turn around with this, new company and really get back to it being a true enterprise fund, it would be able to put all of its surplus into its own surplus.
Exactly,
Right.
and that's what I was gonna
Right,
say.
and right now, we really can't do that, and that's why we didn't pull out the CIP, because really, if
That's
we
fine.
did, we would have just been, we were like, we don't even know if we can pay bills, how can we put CIP?
Yeah.
Although, I do believe that in our system, that there was CIP designated before the last 2 years, and I think we have to honor that. And that because it was designated, my last recollection, I'll find, I think it was like 31,000. Does that mean that money is actually sitting in a spot? No, but we probably, if it wasn't ambulance money put aside in a separate CIP location, we would wanna do that, because we did close out the check. So that's kind of the down and gritty that most people wanna know. Believe me, the book's a lot thicker than that.
It says brief audit review, Nancy.
Yes. So that's, but this
You
is what,
told me
it is.
it was going to be a brief audit review, that's how I wrote it.
Good job.
And that was brief.
That was
Which
It
is
was.
what you need to know.
Yeah,
But we may
the
not.
bottom line, where we lost, where we gained.
That's all I
Yeah,
figured.
That's all we.
And
Yeah,
for now.
you'll get a signed copy when the full book comes out for midnight reading with beer.
Excellent.
No, that's, because I think, wasn't it last year that we took a lot of money on CIP that the ambulance department owed the town?
Last year, they
Remember
still,
I kinda went ballistic on it because it was like,
Can't even imagine.
No,
Can't
not
do
at
it.
all.
I remember that because it was quite a huge amount of money, and it seems to me that it had drained their CIP down to like $5,000 or $6,000, and that money was to.
we didn't take from a CI, well, we took, there was a checking account that had money sitting
Had a
there.
surplus.
It was just sitting there, it hadn't been used, and I made sure when I came on, first of all, it was in a checking account, unsecured federal dollars, moved it into an ICS account so that it had federal insurance. But it really was a combination of their surplus and CIP, but only designated CIP is what is actually when you make a warrant article and you vote it, and then you put it aside, so they had bought an ambulance, how long was the last time, 6, 8 years ago?
Yeah.
The rest of that was surplus that had built up before, and it started with about a $30,000 loss, and I can show track it from like 2017, then it went to 50, then it went to like 130, and literally in our general ledger, there's a due to, due from. And it said, due to general government from ambulance, and that number tracked how much, really tracks it for us, how much their bills were paid by us. So I said, Mike, it's time to close out that account and put that money into ours, because we are down 500,000 that we've paid in their bills, which means our surplus is down, so we need to, and we just closed the account. But I'll double check, because if we do have some designated because of voting, we'll make sure that, obviously we have, and you can't see here what the surplus is, but that's also in here, like what they say the bottom line is that we have in cash, supposedly. And we do use that. We like, and it actually is in our audit, allowed for us by law. We don't take out a loan and then pay our bills and wait to collect taxes. We're literally paying bills in July, and sometimes into August, and sometimes into September before we've collected any new taxes. And we're
Right.
using, that's the fluidness of our money. But we are healthy financially. So there's a, if we can get those numbers, and then I still think we should go off for another different auditing company.
Yeah,
This
This
is-
is the
I shouldn't
hardest
have got
thing
this
to
on
wrap
March.
my head around,
I shouldn't have this in
because we're
mind.
looking, our mind is in 2020.
Yeah.
Right.
This audit
Yeah.
is 2020, 21.
2021.
We're done on June
We threatened
30th.
them last year, I think it's time to cut
Well,
the medical cord.
Where do we, that's.
Yeah,
Well,
so
we've
we've
said it before,
Well,
right?
we're gonna put it out
And-
for bid, and it's
Yeah.
just a standard RFP to our locals or whatever,
Yeah.
and we're still gonna come out better even though it's already approaching May, because people like to start in June or July. But if somebody commits to us, whether it's Chester and Kearney, whether it's Fouch and Company, whether it's somebody like that,
Would be nice.
Just want
Like
somebody to
Carney.
walk in the door.
and
Exactly.
one
You know, we
person,
literally
Well, we
copied
had-
2
Come
reams of
on.
paper to
That's ridiculous.
send them by electronic
We've had
file.
They had their chance.
That's way too much.
It's
we've
so
had Phelps
Yeah.
before,
time consuming.
No,
and
I'm
that's
not
why
gonna
we went to Smith. And this is historical or whatever, because
Yeah,
Phelps was very small and they were having a hard time putting their arms around it, and our H.R. Smith came in and gave us a proposal and stuff, and at the time, they were on the ball, and they really did a good thing, but
yeah.
I think as
It
they
worked until it didn't.
it worked until
Yeah.
they became
Here
comfortable
we
with
are.
us, and we became somewhat comfortable with them.
The person
Well,
who did the payroll audit was in Colorado, for example.
Right.
So how did that person get all of our payroll documentation?
Scanned.
We scanned it
Sheet
all,
by sheet.
sheet
So-
by sheet, handwritten.
Microsoft
payroll
Vista.
Ridiculous.
Yeah, so
Well, and-
I think
watch
the
out or
other,
I'm gonna get you one of my XP computers.
I think the faster that we get an RFP out
Yes,
Yeah.
yes,
to the local
Yeah.
accounting companies.
Yes.
Yeah.
And
Yes.
get a response back,
let's do it. Yeah.
the better off we're going to be.
It's to the point when I do AP, I make sure I only put one staple. Pull
Right.
Oh, you
things
know.
out.
Yeah, cause you know you're gonna take it
Because I've
apart.
learned this year that when audit calls and says I would like to have this
This.
particular thing from AP, well, if I put 11 staples in
Yeah,
it,
that's a
Yeah.
lot of work.
you
Yeah.
gotta pull all
11
those staples out. Now, I've been saving all those staples to give to Nancy.
Oh, he's got a little metal.
For her
coated
jar.
chair.
So she can sell the metal, so.
You might
Yeah.
be able to make
A
it.
little bit of addendum to your portfolio.
Well, you know, they see me taking the paper out of their trash, put it in the recycle bin. Turn it down the thermostat and turn it off.
Good deal. Alright,
Yep.
awesome.
Okay,
Let's look at 8. Town managers reports.
What do we got?